Good day to you, and greetings from New York City, from Columbia University, CITI. My name is Dr. Leon Perlman. I'm the host of the DFS Observatory webinar, and we welcome you from around the world. Many people are joining us today from all sorts of industries and countries. This is a webinar on mobile money as a digital financial services, risks and mitigation best practices, and it's presented by Mercy Baku, who currently is in Nairobi. So a bit about the DFS Observatory. The DFS Observatory is funded by the Bill and Melinda Gates Foundation. We were formed last year. You can go to our website, dfsobservatory.com. And what you can see there is our legal database of over 55 countries and almost 800 laws and regulations that we've carefully put together for you. This is what we do besides the legal and regulatory database. We do quite a bit. We do webinars and roundtables. So we have our annual DFS and Emerging Payment Summit, commentaries and analysis of new laws and regulations. And we close collaboration with industry regulators, academics, donors, standard-setting bodies around the world. So these are our series of webinars. You can see some of them from the but today is, of course, fraud, trends, and risk in digital financial services. Next week is introduction to the Gates Foundation Level 1 platform. Then October 10th, competition aspects of DFS, then introduction to payment technology, RegTech, and use in financial inclusion, and then one on de-risking and impact on financial inclusion. There are many others. I encourage you to go to the DFS events webpage to register for these and other events that we hold. So for those who've been on webinars before, you'll know that if you attend 6 webinars, you can earn a certificate, but also to do that, you have to answer 10 multiple choice questions post the quiz and obtain 60% each for the webinar quiz that you attend. Now, the quiz questions are only live straight after the webinar, so if you for 2 hours. But if you don't complete the quiz within that time, they don't count for certificate purposes. Now, you need to look carefully at the webinar today. All the questions will be based on what's visually represented in the slides. So you need to look at the slides, not necessarily listen to the what the presenter says, and you should get through the quiz quite well. Okay, we onto the webinar. Mobile money as a digital financial service, risks and mitigation best practices, and presented, as I said, by Mercy Baku. She's a well-known AML and CFT consultant on DFS and also a consultant to TGAP. And I've worked with Mercy in a few capacities, and I know she's going to do a great job, and she really is one of the top experts on the subject matter. So I will now hand over to Mercy in Nairobi.
Good morning and good afternoon, everybody. Today, mobile money as a digital financial service, the risks and mitigatory practices. Now, the topics that I will cover today will be mobile money and financial inclusion, mobile money and the risks. Now, fraud is a predicate offense for money laundering and terrorist financing. So most of the risks that I will be covering will be based on that, but with fraud being the major typology of money. And then I will cover the controls. I will also cover the compliance challenges, and then say a little bit about key takeaways for stakeholders. So bridging the gap, the role of mobile payments in financial inclusion. You cannot have a discussion about mobile money risks without talking about the role of mobile money in financial inclusion. Now, mobile financial services are part of a broad range of financial services delivered through digital channels. Today, mobile money is the single most effective contributor global financial inclusion initiatives, particularly in the developing countries, with the launch of M-Pesa in 2007. It has facilitated access to cheap and reliable financial services to a formerly unbanked population segment. And the recent innovations in mobile money transfer services in countries like Kenya and Tanzania, coupled with favorable regulatory environments, have actually contributed to unprecedented success in financial inclusion initiatives. Now, going on, today we have more than 277 deployments across the globe, 140 of them in sub-Saharan Africa alone. And part of the success of mobile money relies on the use of agents, especially retail shops, grocers, little kiosks, supermarkets, and petrol stations. Today, mobile money transactions account for on average over 50% of all cash-based transactions. And mobile money users surpass the users of traditional banking services to an even greater margin. I can go on. Okay, this is just a visual of what the mobile industry space is right now. This is taken from the GSMA Mobile Money Industry Insights. And you can see there that today we have over 500 million registered accounts as at December 2016. And I won't dwell very much on that slide. Now, the types of mobile payment services that we have today, we have telco-led services, where the provider is the telco, which is licensed to provide NFS on its platform or the network in East Africa and other parts of Africa. Then we have bank-led, where the license is held at the bank in partnership with the telco provider. This is common in South Africa, West Africa. We have non-telco-led services, which are offered by privately licensed non-bank providers, payment services using mobile payment platforms. Going on, we have mobile banking services which are offered by banks on the various telco MNT platforms in partnership with the telcos. Then we also have mobile virtual network operators, MVNOs, where we find that banks are also entering into the telco space and acquiring virtual network licenses. Today, we have a wide range of mobile money products. Mobile money has gone beyond just money transfer. We have, apart from money transfer, we have deposits, transfers, and withdrawals from mobile wallets, including savings and investments and loan disbursements. We have mobile payment services, we have bill payments, and you can actually pay for anything using your mobile phone. And then we have mobile banking with telco to offer mobile banking services on their platforms. Then we have airtime management time for yourself and others, and even pay your bills. So, what are the risks? And this is the dilemma that risk professionals have. How far do we take financial inclusion and also cover the risks? Now, mobile money is a new payment product, as indicated in the FATF guideline in 2012 on MPPS, and they are currently becoming the preferred coin by concentration of fraud and other criminal activities. We have a variety of frauds that are occurring, mainly on mobile money and even mobile banking. We also have cybercrime about in a bit. And why have banks and mobile money providers, why are they becoming a soft target for criminal activity? This is largely due to the ubiquity or prevalence of mobile phones, the wide acceptance of MMT as an alternative tool for financial inclusion in developing countries. In 2007, only 1 billion of the world's 6.5 billion people had bank accounts, yet about 3 billion had mobile phones. And in September 2015, we already had 7.6 billion mobile connections and 3.7 billion unique users. Now, another reason which makes mobile money vulnerable to risk is because of the speed of delivery and also the fact that it is a cashless service. So the transactions are difficult to trace. It is also a non-face-to-face service. Few or no frontline KYC checks on an ongoing basis. This is mainly because of the agent network. This is a risk around the agent network. Then we also have a lack of fully automated fraud prevention, transaction monitoring systems and controls. This hinders timely detection and prevention of fraud and other criminal activity. Normally, these systems are quite expensive, and you'll find that a number of providers may not be able to invest in them, or may have may cut corners, or may be using manual tracking systems. Now, going on, this particular slide, what I'm just trying to emphasize is that financial inclusion and innovation must go hand in hand with appropriate controls. There is always the need to balance expediency with controls. And because of these, the prevalence of mobile money fraud and also other financial crimes, this has given rise to the need to implement comprehensive risk management programs in both mobile transfer and the electronic payment sector in order to prevent these risks from crystallizing. So I'm just going to run through the summary of the mobile money risks, which have been categorized as customer risk. This is because we find that countries with largely unbanked and illiterate rural populations also have no identification regimes, and they will have difficulties in filling out KYC, due diligence, and tracking criminal activity. Then we have agent risk. As I said before, that mobile money, the huge success of mobile money can be attributed mainly to the use of the agent distributor. That's what can lead to difficulties in carrying out agent diligence and compliance monitoring, especially in the rural areas. There is also the problems of adequate infrastructure, and you have a lot of agents if you are not keeping on top of where this kind of product is capable of having many multiple high volume and high value non-face-to-face transactions. There are multiple. We also have border risks arising from the product. And again, because the product is offered through partnerships with third parties, there will be risks around that, especially on due diligence and compliance. Then we also have system risk. This mainly comprises inadequate system controls lack of funding for automated systems, which make it difficult to carry out comprehensive transaction monitoring and sanction screening. We also have poor access controls, facilitating abuse of access rights. Then we also have regulatory regimes will create opportunities for example, proliferation of unlicensed money transfer agencies or even unregulated money transfer products, which can be used to facilitate money laundering. These above risks can create opportunities for fraud and other criminal activities such as money laundering and other financial crimes. So what are the typologies? We've spoken about the risk, and I want to now just run through the typologies. Now, the typologies are divided into three. There's the consumer affecting typologies. Then we have provider affecting typologies. Then we also have an agent affecting typologies. So for consumer affecting, we have information fraud. We also have the compromise of bills and unauthorized fraudulent SIM swaps, where the customer's line is fraudulently swapped, and then the person gain access to the wallet. We also have loss from erroneous transfers, where, for example, where a customer sends money to the wrong person who refuses to send it back. Then there are all manner of hoaxes and messages, fake mobile money confirmation messages which are sent to customers, and also promotional scams and schemes which are mainly set up to defraud unsuspecting and illiterate customers. Social engineering. And if we can go on. Okay, I will go on with consumer affecting fraud. We also have unauthorized access to mobile wallets and banking accounts, leading to fraudulent transfer of funds. We also have what is known as ATM withdrawal fraud, agent self-reversal, and deposit. Then we also have agents charging for over-the-counter transactions. And then we also have agents not giving the correct amount of money. This is for withdrawal transactions. And we have also had in the recent past, we have had issues with Ponzi and other illegal investment schemes. Now, turning to agent affecting typology, these mainly revolve around deposit fraud. We have fake currency deposits. We also have agent steal fraud, where fraudsters gain access to the agent to steal and are able, by use of compromising of their PIN, they are able to gain access to their float. There's the third one is also related to that on float loss. We also have customers defrauding agents to steal. Then we have impersonation of telco and utility company staff, whereby the fraudsters will call the agent and impersonate the telco and persuade the agent to reveal their PINs, and then they gain access to the agent float. Again, we have withdrawal reversal fraud, where customers will call the provider and claim that they have not executed a withdrawal when they have, and this withdrawal is reversed back to the customer. And then we have agent promotion scams, where agents are promised bonus commissions through promotional scams, and they end up sending some money to the fraudsters. We have pay bill account fraud. This mainly is on fake confirmation messages, where when a customer is paying a bill, they will show the retailer a fake confirmation message. Now, if the retailer does not check their balance, then the person will get the services for free. Again, we also have fraudulent reversals, which are similar to the withdrawal reversal fraud. And then we also have theft, outright theft or robbery with violence at agent outlets. Now, if I can continue, on provider affecting. Mainly this is around agent irregularities on registration, deposit and withdrawal, and even illegal till relocations. Tills are supposed to be used in certain locations that have been assigned to them. And some of these risks, a number of these risks will also involve money laundering and also terrorist financing risks. Suspicious registrations, we have remote withdrawals and direct deposits. Remote withdrawals are where a customer executes a withdrawal, but they are not within the agent shop. And this is normally illegal and goes to KYC and also is also a risk for money laundering and TF. Then also direct deposits. A customer is supposed to deposit money directly to their phone. Sometimes customers will deposit directly to a third party, and this is normally not allowed. Again, this is the KYC agent commission fraud. When agents execute over-the-counter transactions and direct deposits, then they're denying the provider of commission. And then we have the use of mobile money platforms. What are we talking about that? So we also have in the emerging risks. There's been in recent past there have been great strides in innovation, mobile financial services. So some of the new products are mobile savings and credit, mobile insurance and health packages, mobile prepaid cards, securities and investment products. And the common fraud types in these products are digital credit and health insurance scams involving identity theft, similar to the consumer impacting typologies. We've also had cases of mobile insurance frauds. And then again, prepaid cards, which are funded with the proceeds of those crimes, then they can be used to purchase or to purchase goods or services. We've also had instances of IMT, international money transfers, using stolen credit cards. And then, as I said earlier, Ponzi type schemes. And this normally happens when the customer is making small payments through their mobile money towards these investment schemes. So what are effective risk management controls for mobile money? And I'm just going to run through briefly on what the various best practices are for an effective compliance framework. So a prudent mobile money risk management structure will comprise of the following key areas of assurance. We'll have the ethics and compliance risk management, which will deal with fraud management and prevention, and also compliance with processes and also staff ethics. We'll also have enterprise risk management, which will deal with the business continuity plans. For example, if the mobile money platform goes down or the network goes down, and we'll also have controls around information security and revenue and product assurance. Revenue and product assurance will be a different department. Then we'll also have the money laundering reporting office, and then internal audits and information security audit, which ideally should be separate from the risk management. So what are the actual controls? So a prudent fraud management and AML CFT program for mobile money will comprise policies and procedures incorporating the following controls. For KYC, know your customer and customer due diligence, CDD, onboarding and ongoing checks on both customers, agents, and business partners, including identity verification and data integrity, and risk-based KYC for customers who probably are of higher risk. You'll want to have more documentation or a higher level of KYC. Then we have transaction monitoring and sanction screening. It is very important to invest in automated transaction monitoring systems, which will be pegged to the transaction monitoring will be pegged to transaction limits. Again, we have watch list screening. This is mainly for money laundering and terrorist financing. The screening will be done against international watch lists with appropriate link analysis tools. We'll have training and awareness, knowing your procedures. This will be done for staff, agents, and third-party partners. It can be done through the media, through text, through bulletins to agents to tell them about the latest frauds, through agent forums, and basically by taking staff through fraud management awareness sessions. This should be incorporated in the staff training calendar. Then third-party partners should also be trained as well. Then we have product risk assessments. For every new product, we should be in a position to identify the risks before launch and even on an ongoing basis, and recommend mitigatory controls on an ongoing annual basis. Agent management, very, very important, because agents are key to mobile money and to the mobile money service. They need to be trained. Their KYC needs to be up to date and needs to carry out properly. You need to carry out risk-based compliance monitoring, and also put in place penalty structures for non-compliance. Nothing hurts an agent as much as clawing back their commission when they have not complied with a certain process. Then we have technical controls, know your systems. Mainly, most of the internal frauds for providers especially occur because of probably poor access controls. So it's important to have restriction of access rights, and also electronic registration can be introduced to curb errors in KYC. For IMT, we recommend higher controls on IMT transactions and also transaction monitoring for suspicious activity. Then it is very important to put in place complaints recourse channels. This can be dedicated hotlines for suspicious activity and fraud reporting. We can have special desks whereby at the customer service center, where clients just call in specifically for fraud-related complaints. Then we have investigations and enforcement. It is important to have a law enforcement office, for the providers to have law enforcement offices which will deal now with the suspicious transaction activity reports, for blocking and freezing and suspension of accounts of fraudsters, and then again to liaise with law enforcement agents in profiling and arresting and prosecution of the suspects. Then the statutory requirements for reporting. This is also important because the regulators need to know about the ongoing fraud trends. Now going on, those are the internal controls. We talk about the external controls now. And the key external control is regulatory control or legislative controls. We'll have the related legislation, anti-corruption and economic crimes. We'll have money laundering. We'll have cybercrime regulations, agency banking guidelines, and we also have the Penal Code and Evidence Act. We'll also have central bank guidelines, which will make it mandatory to have fraud management controls. And then we will also have sector-specific guidelines for electronic money and national payment systems. All these legislations should be able to provide a mandatory that providers need to put in place. So what are the ongoing challenges to law enforcement? For providers, we have mainly, they will have challenges in putting in place adequate risk management programs. These come at a cost, and sometimes they will not be able to have everything in place. And even just putting in place the policies and procedures. We also have challenges in having ongoing fraud awareness and training programs to staff and to agents and even to partners. I've spoken about the high cost of infrastructure. This mainly revolves around the fraud monitoring and screening systems. They're not easy. They're not cheap. You find that probably business will not then a lack of management. I spoke about efficacy versus controls. Where do you draw the line? Because the business divisions want to innovate, the risk management divisions want to control. So there's always a tug of war there. And then we have the regulators. For regulators, the main challenge is the slow pace of operationalizing legislative reforms. For example, you'll have relevant legislations have not been put in place. Then we have lack of capacity. Regulators also need training and even infrastructural support. Then we'll have dual regulations for providers, especially when you find the mobile money services being offered through the telco-led model. The providers will be under both the telco regulation and also the central bank regulation. So that can also create some conflict. And go on. And then for law enforcement agencies, the slow pace of fraud investigations is normally a challenge because the cases are taken and the suspects are even arrested, but the investigation process takes long, and even the cases are not concluded precisely. Then you'll find in most jurisdictions, the law enforcement agencies will not prioritize mobile money fraud cases. They normally say that the customers actually are responsible for the fraud, especially like, for example, for erroneous transfers, and they don't want to be involved in such cases. There are too many. Then we have limited knowledge of the relevant laws, for example, on fraud, anti-money laundering, and even electronic payments. They're not conversant with the laws. Then we have lack of capacity, funding, lack of training, and also infrastructural support. They will not have access to the systems that, for example, the providers will have access to. So it's very important, for example, for the providers to actively support law enforcement agencies, either by furnishing them with timely records, or even by allowing them limited access to their systems to enable them to investigate these cases. Then we have witness unavailability. That is also a problem, because if there are no witnesses to testify in court cases, then the cases will be dismissed. Conflicting roles and duplication of effort. Very many agencies working on the same cases. This is an area that needs to be addressed. So what are the key takeaways as I come to an end? For regulators and government, it is very important to have the necessary legislation in place, coupled with appropriate regulatory regimes to enforce it, including appropriate training programs for all stakeholders. The speed of delivery of electronic payments may give rise to non-traditional banking risks. Therefore, it is also important for mobile money providers to ensure that they have effective risk management programs in place to detect and prevent fraud and other criminal activities on their platforms. I cannot overemphasize this. So by the same token, it is very important to prioritize investment in effective transaction monitoring systems. Then all stakeholders should liaise on ways in which the cost of such systems can be shared through multi-licensing arrangements. And this also goes to mutual sharing of suspicious activity information. And those are some useful references. I won't mention them. This presentation will be available. Thank you.
Thank you, Mercy. That was great. I think you covered the topic pretty comprehensively. We now invite everybody to send text questions, no audio, please. Send it to the host, and we'll read out the questions and get Mercy to respond. Let's get to the questions. Okay. Great. I've got one from Sunil in Bangalore, who asks, Mercy, in your experience, how do service providers respond to fraud? How difficult is it for customers to get their money back if they're a victim of fraud and the fraud's not their fault?
Well, it will depend on the particular type of fraud. If it's an erroneous transfer, normally what will happen is that the customer will try to call, the complaints recourse channel to the provider, and if they're able to get through, then the provider will reverse the money back to the customer. Now that is normally a challenge because, especially if the customer is not able to get through to the provider in good time, then the fraudster will have already withdrawn the funds. And once the fraudster has withdrawn the funds, it's very, very hard for the customer to get the money back. It now becomes a court case, and that's why I was saying that there are three major stakeholders. Now, for the other scams, I think one thing is very important to offer a financial service is a remittance channel, and you have to draw a line as to where the provider ceases to be responsible. Just like in banking, the customer must also there's a responsibility to make sure, for example, their PIN is secure, that gets money to the right person. Providers will try and they will train customers about frauds. They will carry out fraud awareness initiatives. In some cases, for example, a number of providers have put in place technical controls whereby, for example, you can see the name of the person you're sending money to before you complete the transfer. So you are able to cancel the transaction before if you realize you're about to send money to the wrong person. But at the end of the day, and then also another control is the recourse. And a number of providers have actually put in place quite effective complaint recourse channels to enable the customer to reach them as fast as possible. But at the end of the day, because of the speed of delivery of the service, once the money has getting it back becomes a problem. I agree. I hope I have answered. Okay,
thank you, Mercy.
The question.
Yeah, great, thank you. I apologize. There's obviously a little flutter on the audio link, so I hope everybody could hear Mercy now. From Richard Murray, I think of the GSMA, of course. We are aware of weaknesses in the USSD channel. Are you aware of any instances of the USSD channel being hacked to steal funds from customers' accounts?
The most common fraud around that will be the SIM swap fraud, but that one does not happen directly. The customer, for example, be called by people, by fraudsters, impersonating the telco or the provider, and then they will release their PIN. or they will reveal the PIN, and that will be
Right.
To fraudulently swap the customer's line. And so that probably is the most common case, the SIM swap fraud.
I can answer that question also because as you probably know, I do a lot of cybersecurity work on behalf of the ITU Focus Group, which is ended, and also the new FIGI initiative, where I have the infrastructure security work stream, which deals with this. And unfortunately, it is a problem. It's not commonly publicized because it may be a bit of reputational risk to the provider who publicizes it, but we know it does happen. In fact, there is a study with some ethical hackers who were asked to hack into USSD were able to move funds in 60% of the mobile operators. There were 12 mobile operators that were asked to be penetrated, and in 60% of the cases, you were able to use to move funds via the USSD channel. The USSD channel, of course, can be used to send pins or send your pins, but the biggest issue, even with hackers who may be sitting on the other end of the world, is these DIY IMSI catchers or stingrays, which are very cheap. They're under $400, which can be used to intercept communications between on USSD between agents and consumers who are users who are using USSD to log in. So that is a problem. Again, it's not widely publicized, but we know it does exist.
We also have cases of where compromised.
Yes, yeah.
Yeah,
as you said, the SIM swap, where they intercept your one-time password, is a problem. But even now, you don't even need to do SIM swap. They hack into the SS7 layer, which is the kind of the DNA of all mobile networks, and they can intercept your one-time password through the SS7. They don't even need to do SIM swap. So that's how sophisticated.
yeah.
So, question from Ernest Wasake in Kampala. Hi, Ernest. He's always logs on. We thank you for your participation. What is the average cost of effective transaction monitoring systems? So, what is the cost of AML monitoring tools for MFS providers, if any, exist?
I can only go by, and then this is about 2, 3, 4 years ago. Its average cost is about $2 million, but this is the price about 2 years ago. And that is why I was thinking about license. Normally, the big telcos, for example, they will purchase the screening systems. For example, if you have a big group, then a group like Vodafone, then Vodafone would purchase the system, and the opcos would plug in through sub-licenses, and that makes it so much cheaper. And this is why I was talking about stakeholders coming together and to discuss multi-licensing arrangements. Regulators can also purchase the systems, especially the screening systems. By screening, I mean the sanction screening systems. And then the providers would just get some licenses. But individually, if you're to purchase the system individually, it's not cheap. As I said, between $1 to $2 million.
What?
Yes, but if I can just want to have systems, and a person can probably come up with screening. Any person can come up with a local screening tool, which can be local. It's not necessary to buy the international version.
Okay. There's a question from Obim Okwangu. Are there additional risks arising from interoperability between MNO branded mobile money? In some jurisdictions, there's MNO.
Yes. Yes, there will be risks around that because obviously one provider's control system or compliance program will not be the same as another. So even as you do the interfaces, it's important to ensure that the same controls apply across the board.
I would think also in the interoperability space, one of the risks is the financial risk of settlement. To make sure that the counterparty is able to settle at the end of the day any funds that are due. Yeah. Okay. Irene from Wakagi of Microsave. Can you talk a bit, please, about self-regulation? Can it work in the MFS, and what are the opportunities for this in various markets?
I am not very clear what she means by, or he means by self-regulation, and that is probably the internal controls that the providers will have in place. When we talk about regulation, we have in mind a regulator in place. But yes, if I can give, from the internal perspective, if I can give an example of M-Pesa, for example, M-Pesa was launched before the regulations were in place. But because the central bank had prudential guidelines that were already governing banks, then M-Pesa fitted in very well within that regulatory regime. And the regulations were later enacted in 2011. When that is when the act was put in place. The regulations were actually put in place in 2014, in 2013, and M-Pesa had been operating quite well before that. So it was by the central bank or the banking regulator, the financial regulator has in place its own prudential guidelines.
I can speak to some self-regulation because I was involved in it as my role as head of WASPA in South Africa. If you want to go look at it, the self-regulatory body for value-added service and micropayment providers in South Africa, WASPA, waspa.org.za. And there's a code of conduct there and an enforcement mechanism for consumers to get their money back if they've lost money. Similarly, it's being done in Nigeria. And I think I stand corrected that the FinTech Providers Association in Uganda, which was formed last month, may be doing similar self-regulation, but it's just been formed, so I would do that. Okay, and I think there's a similar question. It's Abdul in Cairo. How solid are consumer protection regulations in your experience? Can you give examples?
Can you repeat that?
How solid are consumer protection regulations generally, and can you give examples of these consumer protection regulations and how they work?
Okay. You'll find that a number of jurisdictions, especially in Africa, have put in place the electronic payment regulations, but they have not put in place corresponding consumer protection regulations. They are just doing that now. But having said that, the providers already have in place their own consumer protection channels and guidelines, and these are working fairly well. But I would wish to emphasize that it is important not only to have a sector-specific regulation in place, it is important to have a separate set of consumer protection regulations that should be adhered to, that the regulators can fall back on and can measure the providers against. Such regulations, for example, will require the provider to have adequate compliance recourse channels. It will provide, for example, for competition restrictions or control. Because it will deal with provider responses to a number of these frauds and how they deal with them. For example, I spoke about erroneous transfers. Consumer protection regulations will ensure that the providers, for example, put in place controls in the system that can enable a customer to see who the recipient is before they complete the transaction. That kind of things. I think it is very important to have separate consumer protection regulations, either separately or within the electronic payment regulation. Thank you.
Okay. One more question from Sam in Jakarta. This will be the last question because we're almost on the half hour to end. Do you think it's a good idea for regulators to mandate specific risk management framework, criteria, and guidelines, or should that be left up to the providers themselves to develop?
That's an easy question. Yes, it is very important for the regulators to be actually the drivers of the process. I cannot overemphasize.
Should they mandate then specific components of a risk management framework, or just say you need to have a risk management framework?
No, they should mandate it. They should provide, for example, for a risk management framework to have the categories that I mentioned earlier in one of my earlier slides. That is the fraud management unit, the compliance unit, the money laundering report, the information security department. Yes, I think it's very important for guidelines, for there to be specific guidelines mandating that. But having said that, the national providers will already have these in place.
Great. Thank you so much, Mercy. And Mercy, of course, if you want to contact her, just you can send us an email, we'll get through to her. And if you've got any offline questions, we're happy to pass them on because we're ending the session quite soon. And if you paid careful attention, you should be able to get through to the quiz, which is live now already. And we invite you, of course, also to our upcoming webinars. Next week, we have Costa Peric of the Gates Foundation introducing the Level 1 platform. And then on October 10th, competition aspects of DFS, then introduction to payment technology, which is going to be very interesting. Then RegTech and abuse in financial inclusion, which I think is very appropriate in terms of risk management and fraud. And then de-risking and impact on financial inclusion. There'll also be another one on infrastructure security, which will cover the USSD issue we've raised. That will also be during the course of November, and you can go register for all of those webinars on our website. And also, if you want to see the previous webinars or even our conferences or roundtables, they are on our event archive page, and you can watch them. So it remains again for me to thank Mercy for a very informative and productive hour session. Sorry about the drop-offs every now and again in the audio from Nairobi, but that's how live sessions go. But we got through it, and again, thank you for your time, and we will see you next time. And so, goodbye from New York City.